Hello everyone. So in this session we will see what are the journal entries for the bill of exchange or promissory note in the books of drawer and in the books of acceptor of a bill of exchange or maker of a promissory note. So drawer is a seller and acceptor or the maker is a buyer. Now let us see the journal entries for this. Goods sold on credit. So goods sold on credit in the books of seller, the entry will be debtor's account. Debit to sales account. So in case of the buyer, the entry will be purchases account, debit to creditors account. Now bill drawn and accepted. Now bill is drawn by whom? Bill is drawn by seller and it is accepted by buyer. So seller has drawn the bill, buyer has accepted the bill. Now in the journal entries in the books of drawer will be bills receivable account, debit to debtors account for the amount of the bill, and the bill is accepted by the seller, by the buyer. So the entry for this is in creditor account, debit to bills payable account. Now what has happened because of this entries? In case of drawer, the debtors account, we have credited the debtors account. So the balance in the debtors account has reduced, so that now it has been transferred to your bills receivable account. So this is a new asset which is created in the books of drawer, wherein now the amount is transferred from your debtors to bills receivable. Now in the debtors account, the balance will reduce and it will be increased in the bills receivable account. Same happened in the case of in the books of buyer also. What has happened is we had passed the purchase entry wherein the liability was created and the amount was payable to the creditor. Now we have debited this creditor account and we have credited the bills payable account. So the liability is created in the form of bills payable and it is reduced from that creditors account. Now next, option 1, when the bill is held with the drawer himself. Now when the bill is held with the drawer himself, the entry, there won't be any entry because we have already passed the entry for bills receivable and there is no entry in the books of Drawee also. Next, now acceptor of the bill, maker of the promissory note, has honored the bill on the due date. Now bill is held by the drawer himself and the acceptor of the bill has honored the bill on the due date. So entry will be, now in the books of the drawer he will be receiving the payment. So bank account debit. Now that payment is received against what? Against that bills receivable. So to bills receivable account. So that payment is received against that bills receivable. So we are crediting that bills receivable account. Now in the case of Drawee, he has made the payment against that bills payable. So that liability has reduced. So we'll debit bills payable account, debit to bank account. Okay. Now, acceptor of the bill has dishonored the bill on the due date. Now, there is a dishonor of the bill on the due date. So what has happened is, because of this dishonor, what we will do is we will cancel that bills receivable, and we will again make that buyer liable to pay us. So in the books of the maker or the drawer, the entry will be your debtors account debit to bills receivable account. Now to bills receivable account, then now there might be some noting charges which are paid by the drawer, and subsequently they will be recoverable from the acceptor. So we have paid those noting charges which are recoverable from the debtor, so to bank account. So your total debtors account will have your amount due on that particular bills receivable plus noting charges. So this is for noting charges which are paid on the behalf of the debtor. Now in the case of this Drawee's account, what has happened is that bills payable he was not able to pay. So now this bills payable will be cancelled, and again the liability has to be transferred to that creditor's account. So bills payable account debit to creditor account for the amount of the bill plus noting charges. Now noting charges has to be borne by the acceptor of the bill, unless he was able to prove that the bill was not properly presented for the payment. Usually he has to bear the noting charges. So now the total liability will be your amount of the bill plus noting charges, which will be payable to the creditor. And since the bills payable has been dishonored, it is cancelled and the liability is transferred to the creditor account. Next, now bill is renewed on the due date, that is cancelling old bill and drawing a new bill including the interest amount. Now the bill in the books of drawer, it has been held by drawer himself till the due date. Now what has happened, there is a renewal of the bill. So in case of renewal of the bill, the old bill will be cancelled. Though the entry for cancelling the old bill is debtors account debit to bills receivable account. This is the entry for cancelling the old bill. Then there will be a new bill. So for that new bill, there is some interest which has been charged. So again, your debtors account debit to interest account. Now this interest is an income for the drawer, since he is getting an extra amount, and it is payable by this debtor for cancelling the bill and drawing the new bill. So this is the entry for the interest. Now the new bill entry for the new bill will be similar to your drawing of the bill. So that is bills receivable account debit to debtors account. Now this bills receivable account debit to debtors account, that is entry for the new bill, will include your amount due plus interest. Now it may also happen that the debtor may make some payment. So in that case, we have to pass an entry for that payment, that is bank account debit to debtors account, and then this bills receivable entry for whatever is the amount due plus the interest. Now in the case of Drawee, now since your old bill is cancelled, you have to reverse that entry. So that is bills payable account debit to creditors account. Now, for the interest, there is some interest which has been charged on the amount due and for the extension of the bill period. So, it is an expense in for the drawee. So, entry will be interest account debit to creditors account, and if some payment is made, we'll pass that entry as creditors account debit to bank account, and then the new bill including the interest amount, the entry for the new bill, will be creditors account debit to bills payable account. This is an entry for the new bill. Now the next one, retirement of the bill. Retirement of the bill is early payment of the bill. So in case of retirement of the bill, what happens is that the drawee or the acceptor of the bill has an excess payment and he wants to pay it early. So in case of retirement of the bill, the entry in the books of drawer will be, see, it will receive some amount. So bank account debit. Now he will provide some rebate, that is discount for the early payment. So that is like an expense. So rebate account debit against what? Against that bills receivable. So to bills receivable account. Now in case of drawee, he has made the payment against the bills payable. So bills payable account debit, because liability has reduced, to bank for whatever is the payment that is made, and to rebate. Now rebate is like a discount received by him for early payment, so it is like an income. So to rebate account. Now the next option, option 2. Now we are taking the same example wherein a drawee has accepted the bill and it is with the drawer. Now what drawer has done is, drawer of the bill has discounted the bill with the bank. Now in option 1 we saw wherein the drawer was holding the bill with him till the due date. Now in this option 2 we are seeing drawer of the bill has discounted the bill with the bank. So there is a possibility that the drawer might be in need of some funds, and so he has discounted that bill with the bank. So the entry will be, now there was some asset known as bills receivable in your books of the drawer. So the entry for this is, he has received some payment. So bank account debit. Now the payment that he has received, the drawer has received, will be less than the amount which is reflected in your bills receivable, because the bank will be charging some discounting charges. So discounting charges account debit, they are like expenses to drawer to bills receivable account. So now what the drawer has done is, he has received the payment and now this bills receivable is with the bank. Now in case of drawee, he has accepted the bill and given it to the drawer. So when the drawer has discounted it the bill with the bank, there is no entry in the case of drawee, because it doesn't reflect any transaction in his books. On the due date, he has to make the payment of the bill. That's it. So there won't be any entry for this in the books of drawee. Next. Now, acceptor of the bill has honored the bill on the due date. Now, in the books of drawer, the bill was discounted with the bank and the acceptor of the bill has honored the bill on the due date. Now, bill receivable is with the bank since it has been discounted, and drawer has already received a payment against that bills receivable from the bank. Now, when the drawer is making the payment on the due date, the payment will be made directly to the bank by Drawee. So it doesn't impact the books of drawer. So there is no entry. Now in case of the Drawee, it has made the payment, honored the bill and made the payment on the due date. So the entry will be bills payable account debit to bank account. Since the payment is made against that bills payable and there will be a reduction in the liability, we are debiting this bills payable account to bank. Now the next one. Now, acceptor of the bill, maker of the promissory note has dishonored the bill on the due date. Now in option 2, the drawer of the bill had discounted the bill with the bank and the bill was dishonored on the due date. So now what the bank will do is, bank will come to the drawee, and when the drawee was unable to pay, it will come directly to the drawer and it will take the payment from the drawer. So in this case, the entry will be your debtors account debit to bank account, because the payment is made to the bank directly, and see, it brings the bills receivable to the drawer and takes the payment. Now this bills receivable is dishonored, so, and there was no bills receivable in the books of the drawer since he had discounted the bill. Now whatever payment he has made to the bank, it is recoverable from that debtor, okay, on whom the bills receivable is drawn. So in that case, the entry will be debtors account debit to bank account. Now this entry will be for your amount of bill plus noting charges. Since there is a dishonor of the bill, there are some noting charges which are paid by the bank. So we have paid those noting charges to the bank and they are subsequently recoverable from the debtor. So this entry will be for the total amount of bill plus noting charges. Now remember, we are not debiting bills receivable account here. We are debiting the debtors account because that bills receivable is dishonored. So it is automatically cancelled and we do not have any bills receivable because it was already discounted with the bank. Now what bank has done is, on the due date it has come to us since the bill is dishonored by the drawee and it has taken the payment from us. So we have made a payment to the bank. Now this has to be recovered from whom? From the debtor directly. So we are not debiting bills receivable in this case. Now in the case of the drawee, since the bill is dishonored, now we have to cancel that. So the entry will be bills payable account debit to creditor account. Now creditor account, see here the creditors account. So in the books of drawee, the entry will be bills payable account debit to creditor account. Now this drawee is required to make a payment to the creditor itself, because on, even if the bill was discounted, see, he couldn't make the payment of the bill on the due date to the bank. So bank has recovered that amount from the drawer. So the drawee is required to pay it to the creditor or the drawer itself. So the entry will be for amount of bill plus noting charges. Next, now let us see what is the option 3 here. Drawer of the bill has endorsed the bill in the favor of third party. Now drawer, say this drawer, he had to pay something to Mr. C. So instead of making an payment, he has endorsed that bill in favor of the Mr. C, and on the due date Mr. C will recover the payment from the acceptor. Now in this case, your entry will be Mr. C account debit to bills receivable account. Now he has given that bills receivable to Mr. C. So the liability of payment to Mr. C has reduced. So we are debiting Mr. C account to bills receivable account, since the bills receivable is given to Mr. C, endorsed in favor of Mr. C. Now in the books of Drawee, there is no effect or entry in the books of Drawee. Since he has accepted the bill, he has given it back to the drawer. Now drawer can do whatever he wishes to do with the bill. So no entry in the books of Drawee for this bill which is endorsed in the favor of third party by drawer. Now the next one. Acceptor of the bill or the maker of the promissory note has honored the bill. So he has honored the bill and made the payment. Drawee. So now what will happen is Mr. C, he will go to the drawee, and since the bill is endorsed to the Mr. C, the drawee will directly make the payment to Mr. C. So there is no impact in the books of drawer. So no effect, so no entry. Since the bill he has already endorsed it, there is no bills receivable in the books of drawer. So there is no effect or no entry for this. Now in case of the drawee of the bill, he has made the payment against that bills payable. So the entry for him will be bills payable account debit to bank account, since he has made the payment. Then in the third option 3, say if the acceptor of the bill, maker of the promissory note, has dishonored the bill on the due date. So now what has happened is it was endorsed to Mr. C, but the acceptor of the bill has dishonored the bill on the due date. So in the books of drawer, what has happened is now Mr. C, now the drawer was liable to pay some amount to Mr. C. So instead of that, he had given that bills receivable. Now since that bills receivable is dishonored, again he is liable to pay to Mr. C. So we are creating this liability to C's account, crediting the C's account. Now this is recoverable from whom? This is recoverable from debtor's account, that is your drawee's account, who has accepted the bill, and the amount here will be your bill amount plus noting charges. So since there is a dishonor of the bill, C has paid the noting charges. Now drawer has to pay C the bill amount plus the noting charges, and it has to be recovered from the debtor. Debtor is the acceptor of the bill. So the entry will be debtor's account debit to C's account. Again here we are not debiting bills receivable account, because bills receivable account, there is no balance in the bills receivable in this case. We have already given that bills receivable to Mr. C. We have endorsed that bills receivable to Mr. C. So in the books of drawer, wherein the bill was endorsed and it was subsequently dishonored, we are not debiting the bills receivable account here. That amount is directly recoverable from your drawee or the acceptor, who is debtor in this case. So debtor's account debit to C's account. So that is your bill amount plus noting charges. So in the case of your drawee, the entry will be, again there is a dishonor. He has dishonored the bill. So reverse the entry, bills payable account debit to creditor or the drawer of the bill. Amount will be your bill amount plus noting charges. So these are all the journal entries for the bill of exchange. We have seen the different scenarios here. So different options wherein the bill is held by the drawer, or when the bill is discounted with the bank, or when the bill is endorsed by the drawer in the favor of the third party. And in all the cases, when the bill is honored or dishonored, we have seen the journal entries for this. And sometimes it may also happen that the drawee may have excess fund, and he may say that I'll making the early payments or retire the bill and provide some rebate. So we have seen the journal entry for that also. And then there might be a renewal of the bill, that is cancellation of the old bill and drawing of a new bill. So we have seen the journal entries for that. So we have taken all the scenarios and we have seen what should be the journal entries in the books of drawer and drawee in all the scenarios. So this was about the journal entries for bill of exchange.